When filing your taxes in 2026, the foundation of your entire return rests on choosing the two primary documents: the standard Form 1040 and the specialized Form 1040 SR. While the IRS provides hundreds of forms for various niche financial activities, these two serve as the main event for nearly every individual taxpayer in America. Navigating the 2026 tax season requires a deep understanding of how these forms have evolved, particularly following the major legislative shifts introduced by the One Big Beautiful Bill, OBBBA Act. Choosing the right form and understanding the new associated schedules is no longer just a matter of preference. It is the difference between a standard filing and unlocking thousands of dollars in new deductions. Form 1040 is the U.S. individual income tax return. It is a two-page summary that acts as the final ledger for your financial life. It is designed to aggregate every stream of income you earn throughout the year, from traditional wages and bank interest to more modern streams like digital asset gains. For the 2026 filing season, the standard deduction found on Form 1040 has reached historic levels due to inflation adjustments. Single filers now see a standard deduction of $15,750, while married filing jointly couples have a threshold of $31,500. Head of household filers sit at $23,625. If you are under the age of 65, this is your mandatory starting point. The 1040 is a modular form, meaning it remains relatively short on its own, but acts as an anchor for various schedules. If you have additional income like unemployment, gambling winnings, or jury duty pay, you are required to attach Schedule 1. If you owe alternative minimum tax or self-employment tax, you attach Schedule 2. If you are claiming non-refundable credits like the child tax credit or education credits, you attach Schedule 3. For taxpayers aged 65 and older, the IRS offers Form 1040 SR, the U.S. tax return for seniors. It is a common misconception that the 1040 SR is a simplified form like the now defunct 1040 EZ. In reality, the 1040 SR is mathematically identical to the standard 1040. You can report the exact same types of income, claim the same credits, and attach the same complex schedules. The primary difference is physical accessibility. The 1040 SR features a significantly larger font size and expanded entry boxes, specifically designed to reduce errors for those who still prefer to file via paper. However, the most functional benefit of the 1040 SR is the inclusion of a dedicated standard deduction chart printed directly on the second page of the form. This is critical because seniors are entitled to a higher standard deduction than younger taxpayers. For 2026, a single person over 65 adds an extra $2,000 to their $15,750 base, bringing their total standard deduction to $17,750. On the 1040 SR, this calculation is laid out clearly, ensuring that retirees do not accidentally overlook this automatic tax break. The 2026 filing season introduces a monumental shift with the debut of Schedule 1A. This is a brand new form birthed by the OBBBA Act, and it must be attached to either a 1040 or a 1040 SR to claim several high-value deductions. The most significant of these is the enhanced senior deduction. Distinct from the standard deduction mentioned earlier, this is a below-the-line deduction of up to $6,000 per person. If you are a senior and your adjusted gross income AGI is below $75,000 for singles or $150,000 for married couples, you can effectively wipe out an additional $6,000 of taxable income using this schedule. Furthermore, Schedule 1A is where the new tax-free tips and overtime provisions are managed. While workers must still report all tips and overtime wages on their initial income lines, Schedule 1A allows them to deduct those specific earnings back out of their taxable total, provided the overtime was earned in a qualified hourly role. This makes Schedule 1A arguably the most important new form for the American workforce and retiree population in decades. Beyond the base forms, the 2026 landscape requires careful attention to how you report specialized income. If you have been active in the cryptocurrency or NFT markets, you will likely encounter the new Form 1099-DA, digital assets. This form replaces the often confusing patchwork of reporting from previous years. The totals from your 1099-DA must be transferred to Form 8949 and then summarized on Schedule D, which is then attached to your 1040 or 1040SR. For those in the gig economy, the reporting threshold for Form 1099-K has been finalized at $2,000 for 2026. If you sold items on eBay or took payments via Venmo exceeding this amount, you will receive this form and must report it on Schedule C. This is where you list your business income and deduct your expenses to find your net profit, which then flows back to the front page of your 1040. A final critical detail for 2026 involves the choice between the standard deduction and itemizing on Schedule A. For years, the state and local tax SALT deduction was capped at a flat $10,000, which forced most people to take the standard deduction. However, for 2026, the SALT cap has been raised to $40,000. This is a massive change for homeowners in high property tax states. If your mortgage interest, charitable donations, and state taxes, now up to $40,000, exceed the $15,750 or $31,500 standard thresholds, you must bypass the standard deduction and use Schedule A. This could result in significantly lower tax liability for middle-class families who were previously limited by the old cap. In summary, filing in 2026 is a multi-step process. You choose your base, 1040 for most, 1040SR for seniors. You account for your specific income streams via the 1099 series, and you proactively claim the new OBBBA Act benefits through Schedule 1A. By understanding that the 1040SR is an accessibility tool for seniors, and that Schedule 1A is the gateway to new tax-free income, you can navigate the 2026 tax season with confidence. The deadline remains April 15, 2026. And while Form 4868 can grant you a 6-month extension to file, the new deduction rules mean that filing early might be the fastest way to get a larger than expected refund into your bank account. While we've covered the major forms and the massive changes coming in 2026, it is important to remember that tax laws are incredibly nuanced, and everyone's financial DNA is different. Whether you're trying to navigate the new $40,000 SALT cap or figuring out if you qualify for the full $6,000 senior bonus deduction, the best move you can make is to consult with a qualified tax professional. A certified public accountant, CPA, or enrolled agent can look at your specific income, investments, and deductions to ensure you aren't just filing your taxes, but actually optimizing them. Tax laws like the OBBBA Act have many phase-out rules and eligibility requirements that a pro can help you navigate to keep more of your hard-earned money. If you found this breakdown helpful, please hit that like button and subscribe for our next video, where we'll be doing a deep dive into the new digital asset reporting rules for crypto and NFTs. Thanks for watching, and we'll see you in the next one.